Okay, great. Yeah. So whatever thoughts I will share are largely based on my experiences from four fronts. One is I've been a practicing chartered accountant for about 9 years. Majority of my clients were MSME clients, so the experience of working with them. Second is in the current organization where I am as a CFO. When I joined, the company was little less than a 500 crore company, maybe almost the size of a medium or little above a medium at that time, and a turnaround company. And from their journey here, experiences out of that. Third is and by design, and I'm happy, I am an independent director on India's first small medium enterprise listed on the National Stock Exchange SME platform, and it happens to be a company from Chennai, a company called Tejo Engineering Limited. I also happen to be the audit committee chairman. I've been there for a little over 8 years or 9 years now. And this particular company, when we did the IPO on the NSE SME platform, the market cap based on the issue price was about 70 crores. And today its market cap is about 800 crores. And it is among the top 1,000 listed companies in India, including companies in the main platform. And this is one of those companies where a good example of how good governance practices help company to get into a sustainable growth mode. And in the SME platform, the good part is the number of investors are relatively less and they stay engaged with the company. They understand the business reasonably well and consequently allow the value unlocking to happen. And lastly, I've been fairly active at the CII, Confederation of Indian Industries forum, where again we get an opportunity to interact with a lot of MSME enterprises. So what I speak is on the experiences of these four which I have been exposed to over time. I may not be able to spend time on all the slides which I have put down here. I'll leave behind a copy of the slide deck with SARC, and I'm sure they have a way to reach out to you. So broadly, I'll talk about some facts about SME. Pannaraj did mention a few of them. Need for CFOs in an SME, opportunities for CFO or a virtual CFO. And my view, given that almost all chartered accountants in practice, majority of clients happen to be MSME clients, it is imperative that we also give them the benefit or our knowledge and experience in the form of the virtual CFO services. What typically is the role of a CFO as part of the CFO suite? 7 guiding principles for a new CFO of an SME. This is one set of slides on which I will spend reasonable time. 4 roles of a CFO for principles to be an effective CFO, and then I'll move to the closing remarks. A few slides, 4 or 5 slides on a few important facts about SME growth in India. And I would encourage many to actively look at a career in SME enterprises. Many of us are reasonably comfortable working with larger enterprises, but I would encourage some of you to take that little disruptive step of being part of a bigger value creation. So over 6.3 crores of MSMEs, and from the government, there is substantial focus to support this particular sector, including during the COVID times. Of course, it does come with its caveat and all. But important is the private retirement funds are allowed to invest about 5% in category 1 and category 2 alternate investment funds, which are regulated by SEBI. Why this is important? Because for the MSME sector, risk capital is the most important one. The availability of risk capital is pretty limited, and that becomes a limiting factor for most of the MSMEs to function. So an organized approach of having more organized money reach the MSME sector, particularly equity, which I call as risk capital, is a very welcome step. At the Bombay Stock Exchange, we have similar stats for National Stock Exchange, but I've just put one stock exchange to get a flavor of what it is. The market cap of companies who are listed on the SME platform is about 31,000 crores, and they have raised about 3,500 crores. So with the very less dilution, they have diluted 20-25%, and they have created so much of value. Companies listed are about 342, and the SME platform and main platform, one of the important differences is the trading lot size. If you are in the SME platform, the minimum lots you can trade is in multiples of 1 lakh. So it brings in very limited number of investors. So some companies prefer to move to the main board over time. And while there are companies who are listed on the stock exchange, there are some companies where there is not much of investor interest, and the trading lots of 1 lakh are not available. So effectively about 103 companies get traded on a daily basis, and there are few companies who haven't been able to meet the criteria of listing in terms of half-yearly financial statements, etc., whose trading gets suspended. But what is exciting is the future of the SME platform in both these stock exchanges is that more than 60 companies are now planning. They have filed their prospectuses or different stage of filing prospectus for getting listed in this exchange. I would like all to also acknowledge the fact that while not a single day goes without hearing something about unicorns, companies who have a valuation of $1 billion. Almost every media, every day, you get to hear something or the other about a unicorn. In India, as we speak now, there are about 58 unicorns, enterprises whose value is beyond $1 billion, which means beyond 7,500 crores. And these entities have an aggregate value of 180 billion. What is important to take note here is all these unicorns are those who have had a fairly small life. They have been 3, 5, 7 years and they've become a $1 billion organization. And almost all of them have started small. All these were essentially startups which started off in a 2-bedroom apartment or some junk shed. So these startups have just grown because of the uniqueness in their value model. It's technology to some extent, but it's more importantly about the uniqueness in the model. Technology is a delivery platform for scaling, but it's actually the uniqueness in the model. And Given the kind of environment we have now, I am reasonably confident, and even public confirmation, and this is from a slide presented by Mr. Mohan Daspai recently in a program. 150 plus unicorns are expected to be in India by 2025. And mind you, all of these are MSMEs in a sense. If you look at the global scenario, and I want to give reference to this for a particular reason. In US, a population of about 33 crores, Indians are about less than 50 lakhs. And of the total unicorns in US of close to 300, about 67 of them are unicorns where Indians are the founders. What is important is in the US population, Indians are just about 1.3%, but they constitute or they are founders of 23% of the unicorns. So it basically talks about the entrepreneurial ability of an Indian, entrepreneurial abilities which we as Indians possess. And all of these have started small and they have grown over a period of time, and the scale has helped them to become these billion-dollar organizations. So why is there a need for a CFO in an SME, an industry perspective? This is a segment which employs, after agriculture, the highest number of people. Almost 40% of people work in the sector. 11 crore people work here. 40% of exports are from the small medium enterprises. Point to take note is, individually these are small, but collectively it's a huge segment, and they deal with more than 6,000 products, contribute to nearly 37% of GDP, not a small number. And in the manufacturing output as well, 45% of it comes from SMEs. And when you look at the growth rates as well, this is the segment which contributes a double-digit growth rate. Almost about 15 lakh crores of fixed assets are there. I want you to take one important point out of this slide: bank lending. So SMEs constitute nearly 40% of GDP, 40% of exports, 40% of manufacturing output, but the bank's lending is limited to just about 16%. Now, and that makes the job of a CFO so tough. From the management perspective, the promoter, principal, shareholder, owner, CEO, whatever be the title, the expectation for them is a better understanding of financial matters, ability to access capital, give advice on decisions which have a financial impact, build credibility. I'll spend a minute on this, building credibility. For most of the MSME organizations, apart from the entrepreneur, the head of finance, you call him CFO, whatever designation, he is the face of the organization. So typically in an MSME, the interactions with bankers who contribute almost 2 times your shareholders' funds. Typical debt equity ratio of 2:1. 2 times your shareholders' funds. The face is the CFO. For the creditors, where you manage those lines of credit, timely payments, etc., the face for creditors is again the CFO. And for working capital management, timely collections, putting pressure on collections. The face again is the CFO. And from the governance regulatory compliances perspective, again, it is CFO. So it is this one soul who actually presents a credible outlook about the organization. So his conduct and actions actually build credibility to the organization. So the way this person conducts himself with all of these people in the ecosystem which I just mentioned is what brings credibility to an organization, and equally beat the competition and stay ahead. As far as the opportunities are concerned, there are different stages of the SME organizations. There are startups who have expectation that the person coming in should help plan and do everything right from the beginning. Distressed companies to help turn around, and I was fortunate enough in a sense to join such a company, and that experience for me is an invaluable experience. And there are second generation entrepreneurs, family businesses. They moved to the next generation. The children have studied abroad. They have a little broader perspective. They have inherited a business. So those kind of entrepreneurs are now looking at making the organization a little more process driven and bring in more professional management. So those organizations also are looking at having CFOs who will help them in their journey. There are SME organizations who are seeking to raise capital from investors. It could be through a listing route or through private equity, venture capitals, and other investment alternatives which are available. And within this segment, there are those larger ones who want to embrace technology much more and improvise their processes further, and also look at unlocking value by making an IPO listing, so on and so forth. As far as the role of CFO is concerned, the role actually depends on the stage at which an organization is, But at a very high level, principle based, CEO is a person who has to focus on strategy and execution. That's his entire focus. As far as the chief operating officer is concerned, his job is to ensure that the day-to-day operations, be it procurement, be it manufacturing, be it the sales side, delivery, all of those are taken care of. But as far as the CFO role is concerned, there is, beyond what we all normally think, a participation in the CEO's role in terms of enabling, developing a strategy and executing. Also working with the COO in terms of effective operations for a cost-effective delivery. And depending on size of the organizations as they grow, you have other CXO suite roles as well which come in. The next few slides are an important set of slides which I would like to share with you, which are again based on my experience, which I call as the golden principles for somebody who is joining an SME as a CFO. So the first and foremost of the 7 golden principles is, when you join as a CFO, is to get a complete understanding of the financial health of the organization. Is the entity making or losing money? Sources of revenue, top 5 expenses, working capital payables, receivables, liquidity position, and most important, while it's given as the last one, my personal experience, and I value it the most. In this list, I value it the most. Learn everything about the business. If there is one person in the organization who should have a 360-degree view of the business, it has to be the CFO. A CEO, a COO, and any other designation, marketing head, whoever, they can afford not to know some portions of the business, but as a CFO, one needs to have a complete understanding of the business. And for me, that's the most important in this list. The next guiding principle, and particularly when it is relatively smaller organization, I would encourage that the bank account and all the financial instruments, the signature power should be only with the CFO and CEO. It might look very routine, but it's very important that for a 10 crore company, 20 crore company, 40 crore company, a 50 crore company, 100 crore company, the CFO has to personally authorize the payments. Only then he will get the pulse of where the money is going. Understanding it by looking spreadsheets and all is different. When you sign an voucher and you authorize a payment and you make the payment is quite different. It looks pretty simple, but personally I've seen many people miss out this basic thing, and some mistakes, they become very costly to the organization. And if they are family businesses, I would strongly encourage that as a professional CFO to deal with family money separately from the business money. Even within the company, I'll share you my own experience in SIFI itself. We have capital contribution, then we have funds generated from operations and debt. Even today, we manage capital fund separately from the accruals and the debt which we raise. Capital, while money is fungible, we ensure that there is a very strict line, and I should give credit to my upbringing at home. That's how my mother manages the day-to-day life, where capital funds are earmarked separately, and years in which dividend is not paid, we transfer that money into the capital fund, and capital funds used for acquiring depreciable assets. The cash generation is again taken back into the capital fund. So that fund is used essentially for growth initiatives, and the rest of the accruals and debt is used for the remaining growth and the working capital initiatives. It's tough, but I found this extremely useful, very, very disciplined approach in building the organization. Third principle is have a good accountant. It's very important to have a good accountant, because accounting is not about journal entries, financial statements and all. The accounting function is a control function, and in a control function you have preventive controls, detective controls. So it's very important that your accounting system should be such that the control systems are inbuilt into it, so that they will prevent anything from happening, and if it happens, it will get detected as early as possible. Of course, some mishaps will be there, but important is to detect as early as possible. So ensure that you are recruiting a good accountant who has the control bent of mind. Else, if you can afford, engage an accounting firm as well. If the business are losing money, the first thing obviously is to stop the businesses which are bleeding. For me, in this organization, as I told you, was a turnaround case. The entire focus was around reviewing expenses and cutting down expenses. It's not an easy job, particularly when you have 1,500 people, 2,000 people in your organizations, where each of them for their respective roles will keep asking you about funds to be allocated for their projects, their initiatives. The ability to stand up and ensure a judicious spend is important. And while controlling expenses, obviously 80-20 principle, start with big ticket items first and keep working your way down. And if the company has borrowings, review the contractual terms, and in the borrowings, every 10 basis points you save from 9% to 8.9%, processing charges from 1% to 0.75%. All of them have a substantial impact. One is a direct expense and cash flow impact, but importantly, you are also giving a message to the rest of the organization. You are giving a message to the rest of the organization that, look, I have done my bit. You also walk your extra two steps in terms of ensuring this level of efficiency. Fifth is another very important control element, which is on budget. Most of the SME organizations, my experience from practice, when I was in practice, they would prepare these budgets largely for the bank credit. So for CMA, bank credit, you prepare those projections. But absence of plan, as all of us know, is planning for failure. And it's very important to have a budget. And for the budget, the best way to build it up is on a grounds up basis. And when you build it on a grounds up basis, one important point I'd like to share here is, do not get into a role of compiling the inputs which have come. So if you are compiling it, there is zero value add. So once the numbers come from the various arms of the organization, spend time with them, understand how these numbers have come, why cannot be a different number, and then arrive at the right kind of budgeting and break it up as month-wise budget. And for somebody to be a good CFO, my experience again is, many times people think CFO is about a larger picture, thinking big strategy and all, but I would like to have a little different opinion. It's extremely important that you should know every detail of what's happening in the organization, and everything which is there in the organization should be aligned to the overall objective of the organization. If I'm spending this, is it having an impact? What is the impact for my organization objective? If I'm giving time for a particular activity, is it having a correlation to my overall objective? That's pretty important. And while doing this, while most of us as finance people are seen as people who are frugal, I would encourage that you should try to bring a bit of balance so that people know that you're not just looking at cutting corners, cutting costs, but actually looking at investing every rupee more productively. That branding internally is important. Penultimate principle, expense management. As far as expenses are concerned, make the user groups of the organization have a budget, and every expense you have to approve it only against the budget. So do not give any scope for unplanned expenditure. The moment you open the gate, it's over, it will flood. So it's important that we build the discipline in the people that if they are planned for it and it's approved, here is the money. Unplanned, now you want to do it, forget it, wait for a later point in time. It's a hard message, but has to be done. And one important point I'd like to leave here as a very, very important takeaway is on headcount, is on manpower. For SME sector in particular, the decision for recruiting a manpower, whether it is manpower costing 2 lakhs per annum or 15 lakhs per annum, whatever be the salary, whether it's 2 lakhs salary a year, which means 15,000 a month salary, or 1 lakh salary a month, doesn't matter. That headcount approval should necessarily have the approval of CFO. I personally see each headcount as not a 2 lakh salary, not a 2 lakh salary. I see it as equivalent to buying a machinery for a 40 lakhs or 20 lakhs. If I buy a machinery, assuming 10-year life, 20 lakhs machinery, my annual cost is 2 lakhs. So whatever thinking I put in buying a 20 lakh machinery, same kind of thinking I should put when I recruit a 2 lakh employee. If it's a 15 lakh annual salary package, I should think of it like buying a machinery of 1.5 crores machinery. So would I put that kind of money to buy that machinery? So headcount is a recurring cash cost, and you don't get a bank credit for this. So headcount decisions have to be extremely sensitive and taken with lot of discipline, more so in the case of an SME business. Lastly, as a CFO, people look at you for all the compliances of an organization. I would like to highlight 2 points on this. You can read the remaining 3 points. And I would like you all to pass this message at every forum you come across. My personal thought is, many people I come across, they keep telling compliances are costly, etc., etc., and they try to find ways in which compliances can be minimized. I would like to state that compliances are costly, whether it is pollution compliance, environment compliance, municipal taxes, local regulations, building construction compliances, whatever. All the compliances are costly, but non-compliance is fatal. If you don't comply and later you are held, the organization can get closed down. Pollution control, I have cut corners. Later, one officer can take you to ransom and you will be forced to shut down the operations for 2 weeks. For a month, entire supply chain will break, customers will desert you, suppliers will become hesitant. My sincere request is on compliance, have a zero tolerance approach. Even if it involves additional cost, just go ahead and comply. It's the law of the land. The benefits of compliance far exceed the risk of non-compliance, because non-compliance means death of the organization. It's not just going to be penalties and those kind of reliefs later. It can lead to death. The second message I'd like to leave is, while filing various returns, government returns, applications to government and all, while some of it might be done by people in your organization, while some of it you may engage consultants. My humble request to all of you is, as a CFO, and considering that the promoter is trusting you, every government paper you sign, personally involve yourself and ensure you understand why an information is being asked and are you giving the right information. This will save a lot of trouble in the future. Most occasions, irregular information which delays a lot of procedures, then we take shelter on procedural delays and it affects the viability of activities which you do. My request is personally be involved in every single piece of paper being filed with government and government authorities. Attributes for a CFO in an SME organization. It is true that CFOs of an SME, the position is riskier than that in a larger organization. Larger organization, you have an army of people. Beyond that, you have multiple audits and fairly established audit procedures and all. You are able to invest quite a bit on technology, GRC compliance, etc. So does this mean the CFO roles in SME is only for those who are brave? My view, certainly yes. So if you want to be a CFO in an SME, you need to be really made of that extra metal to be successful there. While becoming a CFO of an SME, it's important to have a right partnership with a CEO, So between the two, there's so much of collaborative work which is required that you need to ensure that you have the right kind of bonding. There could be some of you here who are working in corporates want to now come and take the CFO roles in SMEs, or who are finance directors, etc., or practicing members want to come in here. Welcome, and I would welcome you to take up these roles. Only observation is, be conscious that in an SME, it is high risk, less rewards initially, but as it succeeds, your rewards will come in and the opportunity to contribute is substantially high. Like every other professional role, here also there's a need for continuous education. There is a need to continue to learn and adopt best practices. We shouldn't get carried away by the title of CFO that I know. There's still so much to learn. So you need to keep your eyes and ears open to what's happening around so that you know the best practices which you can bring in. Being busy is no excuse to learning. I would strongly encourage attending short-term business school programs. It also helps build a good network when you go to business school programs of 3 months, 6 months with some sabbatical. Else, at least spend some time reading good articles. And on capital management, I will highlight two important things. Many organizations will have private equity people participating in the SME. When it comes to private equity investors, it's very important to understand that the PE investors for the 20% shareholding, 30% shareholding, they will have an expectation from you for improving business performance, transforming the cost base, improving controls, and a decision-making process to be built in an organization. And many cases, the moment PE funds come in, they would most likely ask the incumbent CFO to leave, and they will bring in experience of meeting the private equity investors' expectations. Their expectations are quite different. And as long as you're talking to them till the money comes in, their language and conversations are part A. Different. And it's important that organizations should be prepared for this. Now, as far as the CFO's role is concerned, there are 4 areas associated with value. One is in value creation, the way you design your business models, enable value by working with colleagues in the organization, preserve value by managing your assets and liabilities well. But the fourth is equally important, reporting value. Whether it is the financial statements or the corporate websites, or when you interact with the public and other stakeholders at large, the way you communicate value is also very, very important. How your organization has value. So that role is again that of a CFO. Most organizations, and I would encourage all of you to take this responsibility in an SME platform. And when I joined this organization, beyond what you see in the slide, I had a few other roles as well. Some of it I gave up over time. Administration function aligned to the CFO, information technology function aligned to CFO, operations, the infrastructure operations aligned to CFO. Apart from this, HR function to be driven by the CFO, commercial function subject to ensuring adequate controls to be aligned, legal function. All these functions also, as a CFO, you should get involved in an SME. When the organization grows, since you have built so much of expertise in all these functions, it helps you to manage when the organization grows and your people working with you. So it's very important that you should take these extended responsibilities as well. And as is said in this slide, a quote from one of the successful group finance directors: the CFO should be a good communicator, and among other priorities, the CFO should have the strength of character, personality, and intellect. I'll skip some of these slides since I'm leaving a copy with you. Couple of other important slides before I could come to close. As a CFO, I have been in industry initially in 1992. Before there again, I was in investment banking, and in investment banking, I was associated with many small medium enterprises for capital raise. Then in practice and now, the focus used to be initially what happened. So finance people focus was largely on capturing historical information. Now the focus is largely on capturing what's happening now on a real-time basis to help decision making. But as far as the future is concerned, the expectations from CFO is not just giving historical information or information about what's happening now, but it's about giving insights into the future. So given your knowledge, what is it that's likely to happen in future? That ability is what most will expect. And this slide and the next slide are from the Certified Institute of Management Accountants, London. These are slides relatively old, but they are relevant even now. As the CFO, financial information, reporting about the past, operational and customer related information to monitor what's happening all around, and for all of the communications, external communication to your bankers, everybody, how you're modeling your business and the ability to communicate is what is important. And as I said, this slide again, little old slide, but I'm sure many of you will be able to connect to this slide well. There are technical skills, people skills. As chartered accountants, invariably technical skills are there. And on the other extreme, you have the people skills. When it comes to your efficiency of functioning, from data capture to reporting to analysis to insight to influencing decision making and making an impact. Most of us, look at the bottom part, we are so comfortable being in the comfort zone. We have very high comfort when it comes to data capture, reporting, analysis, and it keeps shrinking. But the value creation is actually in the ability to give insights, influence that decision making, and bringing that impact. So and that can be done with strong people skills. So this slide, even it's relatively old, it's a beautiful slide and it holds good even today. Now, let me come to the concluding remarks. In my experience, these are 10 inevitable for one to be a successful CFO. As I said earlier, a deep understanding of business. If there can be one person in the organization who knows the business in and out, it has to be the CFO. If he is not having that understanding, that organization is unlikely to succeed. So organization success depends on how much the CFO knows the organization. Communication skills, the ability to communicate. Communicate is not about just telling what I want to tell. It is about the other person receiving the way I want. Whether the other person can be a peer in the organization, it can be family shareholders. Most SMEs, there are 3-4 family shareholders. Your ability to ensure the family shareholding relationships are all going smooth. That communication ability, that role is with you. So there are 3-4 families, succession planning, all those issues are there. One family member is the CEO. So your ability to manage that relationship is extremely important. And then the bankers and others. Integrity and ethics. Almost everybody looks at CFO as the benchmark of integrity and ethics of the organization. They decide that this organization is an organization of integrity based on the CFO's profile, the way he conducts himself. His profile gives the branding of that organization's integrity and ethics. Your conduct should give confidence to both people and within and outside the organization. And amongst others, you need to give a result-oriented leadership. So within the time I had, I've tried my best to share with you my experiences of opportunities and challenges of working as a CFO. I was not off mark in meeting your expectations. Thank you all.